Hey there. Ready for a deep dive into some high voltage business?
Always up for that.
Today we're looking at, Danish Power Limited,
Yeah.
Indian company making a play
Yeah.
in the public markets.
Right.
And I gotta say, their financials and the industry reports, pretty interesting stuff.
Yeah, there's a lot to unpack there for sure.
So we're gonna break down, what they do and what their prospects might be.
That sounds good.
What do you find most interesting about this one?
I think the timing is really fascinating.
Sure.
They're going public at, kind of a pivotal moment
Right.
for the Indian power sector.
Okay.
Huge growth potential,
Yeah.
but also some hurdles to overcome. So, yeah, I think it's a really, really interesting time to be watching this company.
Definitely. So, let's get into it then. What's their bread and butter?
They specialize in two main areas.
Okay.
Transformers and control and relay panels. And they have a pretty diverse product line within those segments.
So transformers and control panels sounds pretty technical. Give us the layman's breakdown.
Sure. So think of transformers as like the heavy lifters of the electrical grid.
Okay.
They step voltage up or down for efficient transmission and distribution.
Okay.
And Danish Power makes several types, including the really massive power transformers that you see in substations.
Oh, wow.
So we're talking up to 63 MVA and 132 kV. Enough to power like a small city.
Wow. Okay. So that's some serious wattage. And what about those control and relay panels? Where do those fit in?
So those are kind of like the brains of the operation.
Okay.
They're controlling the flow of electricity, protecting the grid from overloads and faults, and they automate various functions.
Right.
And Danish Power makes these for substations up to a massive 400 kV.
Oh, wow. Okay.
Yeah.
So they're handling the big picture power flow
Mhm.
and the really intricate control systems. Interesting combo.
Right. And what I find kind of fascinating is that they're making both those like traditional oil-filled transformers and the newer dry type transformers that use a cast resin insulation.
Oh, yeah. I've heard those dry type ones are a lot safer
Yeah,
because they're less flammable.
exactly.
Much less flammable.
So they're catering to both the like heavy duty infrastructure side and the demand for safer, more specialized equipment,
Right.
which could be a strategic advantage. It suggests they're not betting on just one type of power technology,
Right.
which is pretty smart given the way the industry is evolving.
Makes a lot of sense. Speaking of that evolution then, what's the overall outlook for a company like Danish Power? I mean, what kind of a market are they stepping into?
Well, globally, things are a bit shaky,
Okay.
The economy is stabilizing, but growth is still kind of sluggish, particularly in emerging markets.
Right.
So there's that.
Right. And since they are based in India, how's that all playing into things?
Yeah, so India's a bit of a mixed bag. There's some decent economic growth happening,
Okay.
but private sector investment needs a boost.
Okay.
And that's key for a company like Danish Power to thrive, Sure, they need businesses to be investing in new projects and infrastructure.
Right.
Which means they need all those transformers and control panels.
But didn't you say the global outlook wasn't so rosy?
True.
Like, how does that
Look,
all lay together?
This is where it gets really interesting.
Okay.
Despite all that uncertainty, India's power sector is booming.
Really?
Yeah. They're investing heavily in renewables.
Okay.
And the overall market is expected to double in size by 2027.
That's huge. That's a massive opportunity if they play their cards right.
Absolutely. But it's not just about riding the wave of market growth.
Right.
They have to be strategically positioned to capitalize on it,
Right.
especially in the renewable energy space.
Uh-huh.
And that's where their product mix becomes crucial.
Uh-huh.
Are they making the right kinds of transformers and control panels?
Right. So big potential, but they need to be smart about it. So speaking of being smart, what are their actual plans? What's the roadmap?
Yeah, they've got some pretty ambitious expansion plans in the works.
Okay.
They're building a new factory shed and investing in new machinery to increase their production capacity significantly.
So they're putting their money where their mouth is. That's good.
Yeah.
Are there any risks we should be, keeping in mind though? It can't be all, sunshine and rainbows.
Of course not. There are always risks.
Yeah.
I mean, one thing that jumps out at me is they haven't actually placed orders for all of the equipment yet.
Okay.
And they admit that delays could hurt their profitability.
So supply chain issues, throwing a wrench in the works. We've all seen that happen recently.
Right, exactly. It's not just about having big plans.
Right.
It's about being able to execute.
Yeah.
And speaking of which, their order book We don't have specific details on the size or nature of their orders.
So no juicy numbers to share there, huh?
Not in the materials we have, no.
Okay.
But we do know that they're working with some major players in the Indian power sector, including companies involved in solar, wind, and traditional power projects.
So no hard figures.
Right.
But the fact they're working with these, these big names does tell us they are a serious player in the market.
Yeah, for sure. That counts for something.
That's got to count for something.
But, even established companies face risks.
Oh, absolutely.
And Danish Power, in their financial reports, highlights a whole bunch of them.
Oh, this is where it gets interesting. Okay, give us the highlights. What should investors be looking out for?
So one is competition for skilled labor.
Okay.
Pretty common challenge.
Sure.
They're also really reliant on India's economic growth,
right,
which we talked about has its ups and downs.
Yeah.
But one that I think is particularly interesting is their working capital situation.
Working capital. Now, I know that's a key indicator of financial health, but for our listeners who aren't finance whizzes, break that down.
Yeah.
Why is that a potential, red flag?
Sure. So working capital is essentially the cash a company needs to operate on a day-to-day basis.
Okay.
And in Danish Power's case, they need a lot of cash up front to buy raw materials, like copper, steel, insulation fluids, all the stuff that goes into making the transformers and panels. And they need to build up inventory before they can actually sell anything.
Right.
So there's a big upfront investment required.
So they have to spend a lot of money before they can actually make money.
Yeah, basically.
Okay, that sounds risky.
It can be. And to make things a bit more complex, they've been relying on something called discounting their receivables.
Okay, that sounds like financial jargon.
Yeah.
Break it down. What does it actually mean, and why should we care?
So essentially they're getting paid early for their outstanding invoices by selling them to a third party, but at a discount.
Okay.
It helps them get cash in hand quicker, but they're giving up a portion of their profits to do so.
So short-term cash flow versus long-term profitability.
Right, exactly.
It's a delicate balancing act, it sounds like.
It is, and it raises a question.
Yeah.
How sustainable is the strategy? Can they keep relying on this discounting?
Yeah.
Or will it become a bottleneck for their growth?
Right. Especially with those ambitious expansion plans.
Exactly.
Yeah. That's a great question. Were there any other red flags or potential issues that you saw lurking in those reports? Anything that caught your eye?
Well, there was mention of some past regulatory issues.
Oh, okay.
It seems they had some trouble submitting certain financial reports on time.
Uh-oh. A regulatory slap on the wrist, not a good look.
No, it isn't.
It's not ideal.
And while they've since resolved those issues, it does raise questions about their internal processes, and their track record with compliance.
Yeah, transparency and accountability are super important for a company going public.
Totally.
Investors want to see that everything is on the up and up. So
it's something they'll need to be very careful about as a publicly traded company.
Yeah. Where the scrutiny is much higher.
For sure. So we've got this picture emerging, right? An ambitious company aiming for a piece of this booming market, but facing some potential pitfalls along the way. It's a classic high-risk, high-reward
it seems that way.
scenario.
Yeah. But remember, risk is inherent in any investment.
Oh, absolutely.
The key is to understand the nature of those risks.
Yeah.
And to weigh them against the potential rewards.
Yeah.
And that's what we're here to help you do.
Exactly. We're diving deep into these financials, into these industry reports to help you make informed decisions.
Right.
Now, I'm curious to learn more about their history. They've been around for a while.
Yeah.
I mean, there's got to be some interesting stories buried in their past.
Definitely. And some of those stories might surprise you.
Ooh, a cliffhanger. All right, we'll be right back to explore the fascinating history of Danish Power Limited. Stay tuned.
Sounds good.
Yeah.
All right, so let's rewind the clock a bit back to 1985.
The year Danish Power Limited was founded.
1985, big hair, synth pop, and the dawn of a power player in the Indian electrical equipment market.
Well, not quite a power player just yet.
Okay.
Back then, they were a small private company known as Danish Private Limited.
Humble beginnings. So how did they go from this small private company to, a soon-to-be public entity? It's quite a journey.
It has been. There have been some twists and turns along the way.
Okay.
Actually, their initial focus wasn't even on transformers.
Really?
Yeah. They started out making battery chargers and voltage stabilizers.
That's a far cry from that heavy-duty equipment they're known for now.
It is, but they gradually expanded their product portfolio, moved into DC distribution boards, LT control panels, even power plants. So it seems like they were really steadily building their expertise, expanding their footprint in the power sector, brick by brick.
So it was a gradual evolution then,
yes.
Not like an overnight success story.
Exactly. And their name actually evolved along with their business.
Okay.
In 2004, they changed their name to Danish Power Private Limited.
Right.
Signaling that growing focus on the power industry.
Makes sense. But they were still a private company at that point, right?
Right.
When did they make the leap to going public?
That happened very recently, actually, just this year.
Wow.
They converted to a public limited company and adopted the name Danish Power Limited.
Right.
So this whole move is part of their plan to raise capital and fuel those expansion plans that we talked about.
Okay, so going public is their way of like leveling up, getting access to those resources to really capitalize on the Indian power market. Bold move.
It is. And it could pay off big time, if they can navigate the challenges ahead.
Right. And we touched on a few, right? Supply chain risks.
Right.
The working capital management, that regulatory hiccup.
Yeah, all of that.
Are there any other potential red flags or challenges that we should be aware of as we're kind of assessing their prospects?
Yeah, well, one thing that stands out to me from their financials is that they're really reliant on a single market, India.
Okay.
They're heavily exposed to the ups and downs of the Indian economy.
So putting all your eggs in one basket.
Kinda, yeah. And while India's power sector is booming right now,
right,
there's no guarantee that that'll continue at the same pace, Government policies can change, regulations can tighten, competition can heat up.
So diversification, expanding into new markets, that could be a smart long-term strategy.
It could be, yeah. It would certainly help mitigate some of that geographic risk.
Right.
But of course, expanding into new markets brings its own set of challenges.
Oh, for sure.
Navigating different regulations, understanding cultural nuances.
Oh, yeah.
Building those relationships. Yeah. So it's a trade-off.
It's a trade-off. But for a company with their sights set high, it might be a necessary step. So let's talk about something that's always on investors' minds. Financial performance.
Mm-hmm.
How has Danish Power been doing lately? Let's start with revenue. How much are they actually bringing in?
Their revenue figures are quite interesting. They've seen some pretty significant growth in recent years.
Okay, paint us a picture with some numbers. What's their revenue trajectory look like?
So in the fiscal year ending March 31st, 2022, their revenue from operations was around 1486 crore rupees.
Okay.
That jumped to 1887 crore rupees the following year.
Okay, so that's a healthy jump. I mean, that's over 25% growth in a single year.
Yeah.
Not too shabby.
It's impressive.
Yeah.
And that growth continued actually in the most recent fiscal year, ending March 31st, 2024.
Okay.
Their revenue from operations hit 324 crore rupees.
Whoa, they almost doubled their revenue in just 2 years. That's some serious momentum.
It is. Now, it's important to note that this rapid growth is partly due to that booming Indian power sector.
Right.
They're riding that wave of investment, especially in renewables.
Exactly.
But it also suggests that they're executing their business plan effectively and winning new contracts. They're not just passively benefiting, they're actively seizing the opportunity.
So the revenue story is looking good.
Yeah.
But revenue is only part of the picture, right? I mean, what about profitability?
Right.
Are they actually making money?
Mm-hmm.
Because at the end of the day, that's what really matters
to
investors.
It is, and the answer is yes, they are profitable.
Okay.
Their profit after tax, or PT, has also been growing steadily.
Okay, so break it down for us. Give us those profit figures.
All right. So in fiscal 2022, their PT was 524 crore rupees.
Okay.
That rose to 857 crore rupees the following year. Mm-hmm.
And then jumped to 3807 crore rupees.
Wow.
In the most recent fiscal year.
So their profits are growing even faster than their revenue?
Yeah.
That's a really encouraging sign. It's just, they're not just growing, they're growing efficiently.
Exactly.
Yeah.
It indicates they're managing their costs.
Yeah.
And they're maintaining those healthy profit margins, which is, that's what you want to see in a growing company.
Right. So from a profitability standpoint, they seem to be in a good place.
Yeah.
But past performance doesn't always guarantee future results, right?
No, absolutely not.
Like, there's a lot of factors that could impact their profitability going forward.
Right.
We talked about those risks, supply chain, working capital challenges, increased competition.
Yep.
And then there's always that, that wild card of the global economy.
Uh-oh.
All those can have a real impact on their bottom line.
For sure. It's a complex equation.
Yeah.
With a lot of moving parts. Right. So investors need to consider all of those factors, not just the historical numbers when they're evaluating the company's, financial health. So we've talked a lot about their expansion plans.
Yeah.
But let's dig in a little deeper into the specifics.
Okay.
What are they building?
Yeah.
And how are they planning to actually finance all of this?
All right. So that big project is the construction of a new factory shed.
Okay.
At their existing facility in Jaipur, Rajasthan.
Okay.
And this is where they plan to house all that new machinery to ramp up that production.
Makes sense. More space, more equipment, more transformers, more control panels. Right. Rolling off the assembly line.
Exactly. And they've already started putting their money where their mouth is,
Okay.
They've placed orders for machinery worth 18 crore rupees.
Okay.
And paid a pretty hefty advance.
Wow.
They're clearly committed to this expansion.
So how are they funding this whole project?
Right. Well, this is where their decision to go public comes into play.
All right.
They're planning to use a significant portion of the proceeds from their IPO to finance this construction and equipment purchases.
So they're essentially inviting investors to join them on this growth journey.
Right.
Invest in our IPO and help us build the factory of the future, that kind of thing.
That's the gist of it.
Yeah.
Of course, investors will want to see a solid plan for how those IPO proceeds will be used.
Right. It's not just about throwing money at it. Yeah. It's about spending it wisely, demonstrating, a clear return on investment.
Right. And that's where things get a little tricky. Remember how we talked about them not placing orders for all of the equipment yet?
Right.
There's still some uncertainty there.
Yeah, and they mentioned those potential delays.
Yeah. Well, those delays could have a ripple effect, If they can't get the equipment on time, the construction could be delayed, which pushes back their production ramp up, which could lead to missed revenue targets.
Right. It's like a chain reaction.
Yeah.
Any sort of delay impacts their entire timeline and thus financial projections.
Yeah, so while the expansion plans are ambitious, potentially lucrative, there's definitely a degree of execution risk involved.
So it seems like risk is a recurring theme when we're analyzing Danish Power.
Yeah.
But as we've said before, no risk, no reward.
Well, exactly. That's the nature of investing.
Yeah. And speaking of risk, let's circle back to their working capital situation.
Okay.
It's very closely intertwined with those expansion plans.
Right.
They need that steady stream of cash to keep the lights on and fund this major construction project.
Yeah.
It's a lot to juggle.
It is. And their financial reports reveal some interesting details about how they've been managing their working capital so far.
Give us the behind the scenes scoop. What are they doing to keep the cash flowing?
Well, remember, their business model requires a lot of upfront investment.
Right.
They have to buy all those raw materials, build inventory before they can sell anything. So cash flow is a constant challenge.
Yeah, which means they need a lot of cash on hand. But where's that cash coming from?
Right. So in addition to traditional, bank loans, they've been relying heavily on that technique called discounting receivables.
Right. We touched on this earlier. Can you remind us how that works?
Sure.
And why is it potentially a concern?
Yeah, so essentially they're selling their outstanding invoices to a third party at a discount to get cash more quickly. So it gives them that immediate liquidity, but it also means that they're sacrificing a portion of their profits.
So it's like a quick fix for their cash flow needs.
Yeah.
But not necessarily a sustainable long-term solution.
Exactly. And their financials indicate they've been doing a lot of discounting lately.
Okay, give us some specifics. How much discounting are we talking about?
So as of March 31st, 2024. They had discounted receivables worth 25 crore rupees.
Wow, that's a significant chunk of their working capital.
It is.
Wow, that's a lot of profit they're giving up just to keep the cash flowing. Is that a red flag?
I mean, it raises concerns about their ability to finance their growth without resorting to even more discounting, which could further erode their profit margins.
It's like a vicious cycle. They need cash to grow.
Mm-hmm.
But the way they're getting the cash is eating into their profitability.
Exactly.
Yeah.
And it's something potential investors need to consider carefully,
Right.
Can Danish Power break free from this cycle of discounting?
Right.
Can they find a more sustainable way to manage their working capital?
That's the $1 million question. Or in Danish Power's case, the multi-crore rupee question.
Yeah, exactly.
Yeah.
And it's a question we'll continue to explore as we move on to the final part of our deep dive.
All right.
Where we'll examine some key factors that could really make or break their future success.
Sounds good to me. We'll be right back to delve into that final chapter of the Danish Power story. Okay, so we're back for the final part of our deep dive into Danish Power Limited. And we've covered a lot of ground.
Yeah, we have.
From their humble beginnings all the way to those, ambitious plans for the future.
Definitely.
We've analyzed their products, looked at their financials, uncovered some potential risks.
Yeah.
But now it's time to try to answer the big question.
Yeah.
What does the future hold? I mean, will they become the next, big thing in the Indian power market?
Right.
Or will they stumble?
Well, predicting the future is always a gamble.
Yeah.
But we can look at some key factors that will probably play a role.
Absolutely. So give us the rundown. What are those make or break elements that we should be watching for?
So first and foremost, their ability to execute on that expansion plan efficiently. Mm-hmm. Can they get that new factory built on time, on budget? Can they get all the equipment they need?
Right, because any hiccups there could have a real domino effect.
Oh, yeah.
Right. I mean, cost overruns, missed production targets.
Yep.
And ultimately disappointed investors.
For sure. And remember, they're relying on those IPO proceeds to fund a big chunk of that.
Yeah.
So investors will be watching very closely.
Absolutely. So execution is key. What else should we be keeping an eye on?
So their working capital management.
Okay.
Another crucial factor.
Right.
Can they break free from that cycle of discounting receivables and find a more sustainable way to finance their operations?
Because relying too heavily on that discounting could really eat into their profit margins and limit that long-term growth potential.
Right. It's a tightrope walk.
Yeah.
Balancing those short-term cash flow needs with the long-term profitability. It's a challenge a lot of growing companies face.
That classic growth dilemma.
Yeah.
Any other factors that could, tip the scales?
I think their customer relationships are going to be huge. They've already proven to be a reliable supplier to some pretty big names in the Indian power sector.
Right.
Can they maintain those relationships? Can they win even more of those large-scale contracts?
Because those contracts provide that stability, that predictability, that steady stream of revenue.
Right.
That's the lifeblood of any business.
Totally. And as India's power market continues to evolve, they're going to have to adapt and cater to those changing needs of their customers. It's
not just about building more transformers and control panels.
Right.
It's about building the right ones. Exactly. The ones the customers actually need. They have to stay ahead of the curve.
They do. Innovation is key.
Yeah.
In a fast-growing market like this. Yeah. Can't afford to just rest on your laurels.
No. There's always somebody trying to grab that market share.
Always. That's competition.
So we talked a lot about the internal factors, but what about the external environment?
Yeah.
How might that broader economic picture impact Danish Power?
Right. Well, India's economy is facing its own challenges, just like every other country.
Of course.
Inflation, currency fluctuations, global uncertainty, all of these things could impact Danish Power.
Right.
Even if they do everything internally perfectly.
So even if they execute perfectly, there are still these external forces that could, throw them off course.
That's the reality of doing business in the world.
Yeah.
There are always variables you can't control.
It's a good reminder that investing is never a sure thing. There's always some element of risk.
For sure. But informed investors are better equipped to assess and manage those risks.
Absolutely. So that's what we've aimed to do today, right? Give our listeners the knowledge they need to make an informed decision about Danish Power Limited.
Yep.
We've explored their business model, growth strategy, financials, competitive landscape, broader economic context.
And we've covered it all.
I think we uncovered some intriguing insights, some potential red flags.
Yeah, definitely.
And hopefully spark some thought-provoking questions along the way.
Always the goal.
As we always say, knowledge is power. We've armed you with the information. Now it's up to you to decide whether Danish Power is a company you believe in, a company you're willing to bet on.
Do your own research, dig a little deeper, and remember, the future is what we make it.
Absolutely. That's a wrap on our deep dive into Danish Power Limited. Thanks for joining us, and until next time, stay curious.